Morning everybody, it's Christian from Serene Education with the 4 Majors Analysis update for the 11th of March. Friday the 11th of March. Going to start with the Euro against US dollar. Have a look at the daily time frame. Draw my support and resistance lines, trend lines, etc. There we go. That's the high. You'll notice price has now broken not only the trend line, the major trend line, but it also has broken the prior resistance level at 1385 or 1386. A lot of negativity, extension. You can see this indecision here. Prior day after yesterday's decision has formed a swing low, so we know intermediate trend wise we have a downtrend. So what for this pair? Well, as it stands now, you can see the pair is testing the 20 period moving average. That will become its natural support area on a daily time frame. So a break of that 20 period moving average would confirm further downside movement. Now 20 period is literally the low of this candle, yesterday's candle, the low of 137780. So close lower than that this morning or going into the US session today could see a good setup for further extensions to the downside. Be aware though, we have price support and resistance just below the 13700 mark, 137,500 mark. Why? Because we've had resistance, support in that area. Okay, be aware of that. Could be a small trading range. We might even see a failure to break below this level here to start off with. The low of this candle, yesterday's candle, at 13778, will not see further extensions in the downside, and what we can see is another reattempt of the underside of this trend line. You can see the Asian market has reattempted the underside, but as we stand now, it's trading at the lower end of the range, and because we're in a negative trend and we've broken a major trend line, then let's look to see if we can have a punch through the bottom end of this candle at the 13778 mark to see further extensions to the downside. You can see on a 4 hour, for example, coming back off those highs that we saw, an all-time high. And if I do a fib projection, we've crashed to this 61.8%. Failure to stay above this level, we'll look at the 100%, which funny enough takes it down to a previous swing at 1375, as my analysis predicted on the daily. So CTC on a 4 hour has gone red, hourly red, red again, 50-minute red, all red. If you woken up and seen this, for example, the squeeze breakout, look at the Asian market high, failed to break higher than this 50 period in play. We wanted to break higher than the Asian market to show you the confirmation that momentum's in our favor, and all of a sudden it's rolled over. So break lower than that at 13775, could see further extensions to the downside. CTC is in our favor. That's for the euro against US dollar. Okay, looking at sterling against US dollars next. Let's have a look at the daily time frame. Here again, like its counterpart, the euro against US dollar, we have seen pair trading below a previous swing. Swing high, swing high, swing high, swing high, swing high. Ooh, swing low. This candle here literally cancelled all of this work. Why? Because it failed to bounce on the 20 period moving average, which for some time had acted as a support level, and now by doing this swing low, it's now given us a intermediate trend line. There we go, it's the intermediate. I broke through a previous support area to the upside, which is a bearish indication of it further selling. There we go, straight through it. And where to next? The next swing is at the 1600 mark and the 50 period. So if it closes, if you can manage to close lower than yesterday's low, 16043, close lower, then we could definitely see extensions to 1600, and that's literally 40 pips away, so you can get your 20 pips in that, plus change. So look at the setup intraday, trading below all the moving averages on the 4-hour, hourly, 30, 15 minute, and 5. So negativity in the market. If I go down to a 30-minute chart, you'll see yesterday's low. Yeah, it's 16.040. Got a break and close lower than that to confirm further downside movement. Otherwise, we could see another bounce like we've seen before, and for it just to correct itself. We don't want to do that because then we'll be trading on a support level. We want to see a confirmation break lower to see further extensions to the downside. Everything else is in our favor. We've just got to see confirm break and close lower than 16.0. Failed to break above here or below here, and we see a correction. It needs to close higher than the Asian market high at 16.075 for further extensions or consolidation to the upside. Failed to do so, look for further downside movement. Okay, the next up is the Swissy. We know we're trading below a very strong support area, 0.93500. What you're seeing is price trying desperately to hang on to the underside of that breakout. Once, twice, 3, 4, 5, 6. 6 attempts on a daily chart to close higher. This one did, however, but failed to break above the 20. Remember that. Now the 20 period becomes a resistance level, and sure enough, failed to break above it. 935 is a strong support and resistance area. Today's trading range very indecisive, primarily because we're in this tight squeeze now. Got to see a breakout occurring on this. Will it be to the downside? Because we are trading below a strong resistance. If today we see a break to the upside, it needs to close higher than the 20 period moving average. Can't just retempt 93500 because we've seen that before. It's got to close higher than at least this candle here at 0.9368, which would take it above or make it 0.9369 or 9370. We'll take it above us, the 20 period moving average, and then we could see further extension. Otherwise, we're just going to see price coming down, breakout, pullback, continuation. You can see all the negativity, all these reattempts on the 950 mark. Some breaks, but not strong enough. And you'll notice that the momentum shift is like that now. This high, failing to be higher than that one. And he's seeing a bit of pullback coming along here. Failure to do so, we'd see the pair. You can see the pair is now trading in an uptrend. So we're having a squeeze. If it can't muster any enough strength to reattempt 935 and close higher than 9370, as I mentioned, all we're going to see is a failure to hold the ground, and we could see definitely a nice punchy breakout to the downside, and that's what we're looking for. US dollar, Japanese yen. Price is steady making advances to the upside. Nice bouncing on an uptrend on a daily time frame. Since November of last year, we've just seen the US dollar gain a bit of strength against its yen counterparts, and you can see we're trading between a definite squeezing channel. News out this morning is Japan, huge earthquake, which has really it's going to affect things in their country. Apparently there's a couple of tsunamis that's hit China on their coastline. The news has obviously seen the US dollar take off because of that. And on a 30-minute chart this morning, as of 6 a.m. GP, we've seen price breakout of a consolidation downside. Okay, so if you'd woken up and you'd seen swings and the consolidation, you'll notice that if you put in a bottom on this at 8, if I'm not mistaken, around the 8275 mark, you would have wanted to see price break lower than that, and then an up candle shooting up and really trailing. This is primarily because of the news that's filtered out now about the actual earthquake in Japan. However, this pair has pulled back on 5 minutes. It's now got to break higher than those highs at 83.29 for further upside movements. Can't break lower than this low, otherwise we're going to see this move cancelled, and we could see This is just a fake out. So where to for this on the daily time frame? Well, we've seen a bounce prior and headed back to a support level in the past, or resistance level in the past, sorry. We could see exactly the same thing happening in this pair here. We have a start of that. We had a high, a pullback. So we're not too far off from where the 81.64 mark is at the moment now. Sorry. The 83.374 mark is the 100% fib extension on the projection chart. You can see there we have swing highs on a daily time frame. So big momentum, pullback, engulfing bullish. That created a swing to the upside. Moving average or about to cross, so momentum is up. CTC for the first time is showing us a blue on either side, and everything's in our favor of the daily. So I should look for further upside movement, but it's got to break above 83.29 in order to see further extension to the upside. That's it, guys. That's it for today on the four majors. Short and sweet. Apologize, I can't get into a lot more detail. My throat just can't cut it this morning, guys. I apologize, but I'm hoping that what I've been able to give you has given you some sort of detail what I've seen. Take your pips when they present themselves. Keep it simple, chaps. I can't keep reaffirming that. You must keep your trading simple. Stick to the rules. Very, very important. Don't trade for the sake of trading. Take your pips when they present themselves, and most importantly, trade serenely. Have a fantastic weekend with family and friends.